Hi, this is Michael Abbey with Enterprise Express Tax Service. Just bringing you guys up to date with some news that's come from the IRS over the last 2 or 3 days. Actually, it's quite, I would say, some of it's good news, in my opinion, because I think it really helps people. The IRS is really considering that we now have what I would say is almost rampant inflation, and they have decided to make some adjustments just so that people will feel the pinch a little less. So let's just review that portion of things a little bit before we move on to the rest. Okay, so what the IRS has done is they are saying that the standard deduction, I'm reading from my notes, the standard deduction is now 27,700, okay, for married couples filing jointly. Now, bear in mind that this is an $1,800 increase from this year's payout, meaning 2021. Of course, these measures that the IRS is instituting are going to take effect with the 2023 tax filing season. Okay. Um, and so for individuals, that standard deduction is also going to increase to 13,850 for individuals. Okay. And for married couples filing separately, it's going to be an increase of $900. So just to give you guys an idea of what this means, your standard deduction is what the government typically allows you to deduct on a standard basis without itemizing on your tax returns. So if you itemize on your tax returns, you will not take the standard deduction. When President Trump came up with his tax policy, which became law a couple of years ago, it also increased the standard deduction. Now, the thinking was that by increasing the standard deduction, most people would not have to itemize because, the logic being that if you have a higher standard deduction, why itemize? Well, that's not quite the way it worked out because people ended up getting less money when they filed their tax returns. And of course, with me being a taxpayer, I kind of had to explain to them, well, last time you itemized and this time you decided to do a standard deduction because the standard deductions were higher. However, it still didn't help you out that much. Anyway, I'm just trying to give some background on that. So the fact that the standard deduction is being raised is actually a good thing. And of course, the reason why the IRS is doing this is because inflation has taken a big hit on people's pockets. What you could afford last year or 2 years ago is no longer what you can afford this year. Um, because of inflation, think about the cost of gas, the cost of going to the grocery store. Things have almost doubled in price. All right. So let's take maybe like a deeper look at this. So for single taxpayers, at those same income levels, their tax bills would be reduced slightly, or rather, be reduced roughly by $1,400 and $1,900 respectively. Okay, a married couple with no kids that made $150,000 this year and next year would pay $1,015 less on their 2023 federal income tax bill. That's what research shows. A single filer with no kids making $150,000 this year and next year would face a tax liability that was $652 smaller. This is according to estimates and research that's been done. Let's even take this a step further. A married couple without kids who made $75,000 this year and next year would pay $245 less on their 2023 taxes. So this kind of gives us an idea of how this move by the IRS would impact people's tax returns when they file their taxes. So it's definitely a step in the right direction. Some might say it's not enough, but I would say it's something. It shows that the IRS and the government recognizes that inflation is on the rise and it's taking a hit on people's pockets, and whatever can be done to kind of soften that blow would be really, really helpful. Okay. But remember, this only applies if you decide to take the standard deduction when you do your taxes. If you do not and instead opt to itemize, then this won't apply. The people who might decide to itemize, you kind of have to work this out with your tax preparer or your CPA and decide whether itemizing is going to be more beneficial to you than taking the standard deduction. But that's something you and your tax preparer need to decide. Let's now talk about the retirement accounts. There's some big news with retirement accounts. The IRS has decided to raise the limit of what people can contribute into their retirement accounts. Now people can contribute up to $22,500 in their 401k accounts and $6,500 in their IRA for the 2023 financial year. Now, for 401k accounts, that's an almost 10% increase from 2022's contribution limit of 20,500. Okay, now it's 22,500. And for IRAs, it's an almost 8% rise from 2022's limit of $6,000. So essentially what it means, guys, is this. The government gives you a limit of how much you can contribute into your retirement accounts on a yearly basis. By raising the cap, it means that you can actually put more money towards your savings, towards your retirement savings. And that's always, always a good thing. I actually would like it to be higher, to be honest with you, because I think one thing that we haven't done as well in this nation, this great nation that we live, is to encourage more people to put more money towards retirement. As a matter of fact, when you do the calculations and calculate, let's say you go see your financial advisor and you want to calculate how much money that you will need to live on after retirement, it usually is a very, very rude awakening. You can barely live on Social Security, and you need well over $1 million and some in order to live relatively comfortably once you decide to retire. So this is a very important issue for me, and I think a lot more people should be educated on this. And this is a welcome initiative by the IRS by allowing people to contribute more money into retirement accounts. I think those limits should actually be higher, but I'm not the government. I am not the IRS. Let's take a look at something else. Student loans. Everyone's aware that with the Biden administration has, released a plan for student loan debt forgiveness. The form is out. People can now apply for it. Quick update. A court has decided that the administration cannot continue with that plan for now. It is a temporary judgment. It's not a permanent one. And just to give some history about this, 6 Republican-led states sued the government and said it is illegal for the government, for President Biden, via executive order, to allow these loans to be forgiven. Okay? And so what's happened in the judicial process is that there has now been a temporary stay, meaning a court or a judge has decided that for now, that the student loan debt program led by the Biden administration cannot continue. Okay. Now, the White House has come out and said they recognize what the court has ruled. However, they do still encourage people to keep applying because those applications will still be reviewed. So that's very important. That does not stop you from applying. Okay. Those applications will still be reviewed. And the thinking is that whatever course this takes, I feel that this program will continue in some shape. It may be altered somewhat, but it will continue. So I strongly encourage people to go ahead and complete the application. Um, it will be reviewed, and my guess is that once this goes through whatever course it's going through, um, those loans will continue to be forgiven. There might be some changes here and there, but I don't see it being stopped completely. But this is my personal opinion. This is not what the government is saying, and I'm not a court, I'm not a judge, nor am I a lawyer. I am a tax preparer. I run a tax preparation company. All right, so I hope this gives some idea on what's going on in the finance world and the tax world. My YouTube channel is called the Money Tax Refund channel. Subscribe if you can. And our business is based in Bowie, Maryland, but we also offer services online. Give us a call if you have any questions. Once again, my name is Michael Logechi, Agwood Enterprise Express Tax Refund. Thanks. Bye.